Greetings everyone, welcome aboard. Joseph James, SchoolTrade.com. It's June 25th, 2010, finally Friday here, guys. Another great week. Kind of a challenging day here to finish up our week, but of course, before we talk about the trades we took today, I want to remind you guys, below the video right now is a link to our blog. Guys, the blog has all kinds of great resources, articles, videos, contract specifications. You want to know how we use the crude or how we trade the dollar? Guys, it's on the blog. We just put a brand new page on the blog too. There's a brand new page in the upper right hand corner called Trade Room Resources. So make sure you guys check out that page called Trade Room Resources. There'll be lots of great stuff there, guys, that will help you navigate around our blog and to get to know us a little bit so you can get to, trading with us in the live trade room. All right, so check the blog. Let's see, you only took 3 trades today, guys. One of them was a scratch trade on a 13 range chart. 44 ticks was the total today, guys. 26 plus 18, that's 44 ticks. 440 USD. That brings our weekly total to 45.15, monthly total to 16,600, and our yearly total now just shy of $68,000, guys. We're having a huge month. We did almost 9,000 in April, 18,000 in May, and boy, just shy of 17,000 here in June, guys. Another fantastic month. We've had a pretty challenging month too. It hasn't really been as easy as it was in May. May was pretty easy, but June's been more challenging. We had quadruple witching last week. Right, so lots of things were in our way from really getting a lot of good price action. But again, guys, all we do, we put our heads down, put the blinders on, follow our rules. Don't get frustrated with slow price action. Don't get drawn into impulsive trades because things aren't moving as quickly as they should be. Follow those rules, and at the end of the day, we count our money. Same time every day, right? So here we are, 2 total trades, guys. 44 ticks on a Friday. Not a bad way to finish up, right? I can still take the kids to ice cream this weekend. Let's see here. We got most important thing that happened today. Well, Fridays, again, guys, are always slow, right? Well, Fridays are usually pretty good, but they're usually slower than other days in the week. Okay, we've always had great Fridays. However, though, Fridays will end up a little bit earlier. So instead of trading until 12:30 on a Friday, we're going to trade till about 11 o'clock, 11:30. Okay, so Fridays end a little bit sooner than normal. We've got World Cup soccer this weekend. We've got springtime weather. Obviously here, that caused the markets to be a little bit empty today. We had FOMC Day on Wednesday. We've got a big weekend for sports this weekend. We've got a holiday weekend next weekend. So we're kind of coming into this this time of the year here where traders are looking for any excuse to get out from behind their desks. And this time of year, we oftentimes see Fridays be kind of slow and sluggish. We saw lots of wedge patterns. We'll look at that in a second, right? And that really told us that we had a slow and sloppy day ahead of us. All right, so let's look at this, what we look at first. Now, here's the dollar first. We always like to begin in the dollar. The dollar index leads everything else, right? The dollar index is the fundamental reason why everything else moves. It's the world's reserve currency. It's the denomination currency. So, of course, if you buy gold futures, you settle in gold, right? You're going to get paid in dollars. All right, if you settle euro futures, you're going to get paid in dollars. So that's why the dollar is where we fundamentally see all the changes happen here. All right, now you'll see in the slower time frame, we have the slower time frame here on the left side, and of course the fast time frame here on the right. And so your slower time frame, you can see we've got the wedge pattern here. Right, got your wedge pattern up and down. And of course the wedge pattern, nothing new. We've seen this now a couple days in a row, and we've got these double tops and double bottoms that of course are kind of holding us sideways here. So a wedge pattern on the dollar. Now, if you had any concern about whether or not the dollar was sideways or not, just look over here at your fast time frame. And your fast time frame, you can see here, we got this sideways range here over 1, 2, 3, 4 days here. So Monday was a little bit of a push up, but when we had Tuesday, Wednesday, Thursday, and then Friday here, of course, you can see nothing but sideways here. Okay, so the dollar, of course, gives us that initial heads up. We then looked at other markets. Okay, crude oil next. Same thing, wedge pattern here on crude. You can see, of course, trend lines down, trend lines up. We just broke that trend line, as you can see here, and that kind of was the catalyst that got this crude market driving to the upside today. If you're watching the current price on crude, right, we're up here now at 79 now by the time I'm filming this video. So it broke out of this wedge pattern, and once it breaks out, that's when it's going to give us those opportunities to trade. And of course, a little bit late to be doing that though on a Friday, right? Tough to be excited about taking trades late on a Friday, of course, no matter what's happening. And then of course look at the gold here. Now gold is a little bit more difficult to see here, but you can still see the same wedge pattern here, right, from the highs and the lows. And then we just broke that wedge pattern here, guys, right, early this morning. Okay, now gold did the same thing. Gold ended up actually breaking through and actually pulling up to the upside again. Okay, so both gold and crude late this afternoon here began to jump. And then finally here you can see again, here's the S&P. Same thing, same wedge pattern here. So you can see, guys, right, trend line up, trend line down, and of course here we are right in the middle, right, of this range. And so the wedge pattern, once again, guys, right, we look at the wedge patterns. The wedge patterns obviously tell us to be very careful. What they do, though, is they give us an opportunity now to take a trade once we either break out to the upside or we break down to the downside. Okay, so we got to wait for those breaks. And we talked about this early in the room this morning, and the question was, how do we know when the actual level's been broken? Right? If I've got a wedge pattern here, right, how will I know if we break out to the downside? How will I know when that breakout really happens? Because oftentimes we see this, where it'll break out halfway and then get sucked right back up in, right? So it comes down and then goes right back up. So how do we know when this thing's broken? Well, like I always say, look for the breaker pattern. So if we break to the downside, okay, I'm not gonna be a seller at the break. Okay, I'm not gonna try to predict this break to happen. I'll then wait for the sellers to subside, a little bit of a bounce, and then I'll mark up my swing low and I'll look for a break below that swing low. Because that swing low right there, that's when I will define that we truly have a breakout. Right? Once the swing low is violated, that announces to the market the sellers are in control. Anything above that swing low, and it's just a push out, right? It's just a breakout. It's not there yet though. Okay, so make sure we get that full move. And like I always say, members, look for the breaker pattern. The breaker pattern will confirm you've broken that level of support or resistance. All right, guys, so wedge patterns across the board this morning, they require a little bit of patience. You've got to wait for those patterns to be broken up. But then, like everything else, comes great opportunity. Okay, so know how to trade it. Now, guys, we only took 3 trades today. Pretty slow and sluggish. We spent a lot of time answering questions and looking at our slower time frames, planning the much bigger moves today. But we took 3 scalps, though. 2 scalps, 1 day trade. The first one here at 9/11. This first one, of course, a breaker pattern long. Very easy pattern, guys. Short-term trend up. We're moving to the upside right now. We're going to break above resistance here at 54.9. Mark up your swing high. Break above that swing high, and there's your breaker pattern long. 55.6. This is a real easy pattern. It happened just before the 9:15 alarm went off, so we always like to get a trade taken before 9:30, put some money in our account, pat our pockets a little bit, give us some confidence going in the rest of the day. We took 2 off at 4, 1 contract off at 8, and 1 off at 10. That's 26 ticks or 260 USD. 8, 16, 26. There's 26. Now, guys, we also looked for a 2-step pattern. We came up and tested these highs, of course, and as you guys know, whenever we hit the high of day, I'm looking for a 2-step short. Mark up my swing low here, and then break below that swing low. There's your 2-step pattern short. Now, you'll notice, though, follow me down bottom here, and look at momentum. Momentum very choppy right there. That's what kept me out of that 2-step. And if you guys were watching the tape at that time, we had very inconsistent price action. You can see it really referenced here, and you can see just how choppy that price got. So that's why we didn't take that trade. But guys, look out for that 2-step short in the future. On Monday morning, we'll see better volume. I will take that trade next time. Okay, but Friday, late Friday morning or Friday mornings, sometimes it takes some time to get some volume going. Didn't get enough volume there. Momentum didn't confirm, and we had just very choppy price action. But we got 26 ticks out of the first trade, which of course meant all the world to us because on a Friday, we never know how long this market's going to be moving today. Okay, so 26 ticks was the first trade. We decided to skip the 2-step short because of the price action in the market. And then, of course, next up is our only day trade of the day. This wasn't a scalp. This is on a 13 range chart. And this 13 range chart, right, a slower time frame, you can see a couple things here. First things first, we have this trend line here, right? So notice this trend line as support. Now we come up, we test the high of day. On a 13 range chart, this is going to be a much slower, slower trade pattern. We're going to bounce off the high, mark up my swing low, and try to break that swing low for our 2-step pattern short. Now, as you can see here, it didn't work out too well, right? We knew the trend line was there. We saw a lot of sellers, right? We saw a sea of sellers, but nothing got the price moving. So I got into the trade, But then knowing that trend line was there, knowing momentum, of course, began to shift and curl back up, knowing that we